The imbalance is here. That's colored in. The bodies here are telling you that it has unfinished business up here. So if you started with a short down here and your stop is at that higher, just one tick above it, as I hypothetically outlined, you don't have to sit there and take the full stop. There's a logic behind where you can kill the trade where it's no longer a viable setup because the candle's bodies are doing what's in there would be a full stop out. So you don't need to panic. You don't need to be fearful, but you do have to respect the measure of risk. And if you don't see the signatures and price action supporting your idea, you don't waste time and spend mental capital worrying about the trade setup. It's either going to be good or it's not. The trade immediately starts delivering for you or it doesn't. And if it doesn't, that's problematic. Then by having that imbalance framed, you start seeing a body like that. That right there is your first warning sign. And then we open up the next candle and we trade higher than that candle. That's it. You kill it. You don't hold the short from that point on. So what do? You wait, you move to the sidelines, and then when it goes higher like that, where it would have been an initial stop out, that would have been a full stop, you feel better about yourself because you've managed risk appropriately. And you're not reacting to price. You're reading price, you're letting it tell you the narrative and the story that it had unfinished business above here. Why? Because the imbalance should have kept the bodies inside of it, and it was unable to do so. So we're not taken by surprise. It just didn't pan out in a low probability condition. So all these things become much more impactful in your learning. So that way you're not guessing. You're not trying to, pull things out of thin air and hopefully it pans out for you. And you're not worrying about getting stopped out. We're looking at the stop in relationship to what the price is delivering. And if it's outside these imbalances where we know, based on my concepts, the bodies are not permitted outside of it. The wicks are. As soon as we have a close outside of it, that's indicating that this is probably going to have to be revisited again. And if your stop loss is there on a short, and you don't see this, as I outlined in real time, you'll get a larger loss when it's not necessary. That's not necessary. Now, there's going to be some times where the market does go against me and it just snaps and runs for the stop. There's nothing you can do about that. That's the reality of trading. You're going to have that. It's a cost of doing business. No one's perfect. You're not going to have 100% strike rate. And this stop has been paid. It's been paid to do its job. Protect you from taking larger loss. Well, you still have that responsibility as a trader by watching price action. And this is why it's important to be listening to these boring parts, because you now have learned how to manage a stop. So anyway, getting back to what I was saying, as soon as we had that closing price here outside of the imbalance that we would anticipate as real resistance, if the algorithm's allowing that candle to print and close outside of it, that's the warning sign that that stop is not safe, and you have time to abort it. Don't waste time worrying about it. Don't second guess it, because what's worse, thinking it's likely to happen and then it runs for your stop and you have a full stop out, whatever the maximum risk was that that trade idea with that stop would have entailed, or seeing it, understanding that the probabilities have shifted so far away from you and not being in your favor anymore, neutralizing the position, taking a very, very small loss, a paper cut, and being correct by limiting the exposure of risk and not letting it take the full stop. The mindset that provides you it's easier and it's much more palatable for a trader to take a loss when they're doing it with the idea it's a smaller loss than it would have been if they just would have let their stop loss get hit. Think about your development up to this point right now and what you've been utilizing to trade with and how you've been taking losses. How many times have you been stopped out? How many times have you sat there and knew in your heart that this is probably going to stop you out, but you didn't have the gumptions? Let's just go in there and close the trade. I don't want to take a full stop, and there's nothing wrong with it. Do it. You have to treat it the same way that I teach you to take partials, because partials pay 100% of the time. There's never a partial profit ever that failed to make a profit. If you're in profit and you're taking some of the position that you have off, you're profiting. There's nothing wrong with that. No matter what anybody else tells you, that's a good thing. The same mindset you have to have equally with preserving equity and limiting risk. And the reasons why I teach these PD arrays and order flow and studying real-time tape reading, you'll be able to see when the positions that you are in and you have defined risk, as you should with a stop loss always, there's no necessity for you to hold that full stop when you now have indications being presented to you in the delivery of price that it's telling you your stop is now in jeopardy. So you can say, okay, with this trade idea, I was looking for it to go lower, knowing it's low probability, but your trade shouldn't be set up in a low probability condition. It should be high probability. But to push the envelope and show you, okay, let's play devil's advocate. We're going to use this as a short idea, and a hypothetical stop would be at the old high there. I taught you exactly when to abort the trade. Exactly when it's no longer viable. You should never feel bad about aborting a trade and preserving a full stop out. But unfortunately, as a new trader, you're resisting that experience by letting your full stop out occur or opening the stop to a larger stop loss, which are both detrimental to your development and longevity as a trader. So you have to have a reason to know the trade's no longer viable. These PD arrays, the things I'm teaching you, the imbalances, the liquidity, they have a dance between them. And when they don't agree, do not allow full stop loss. Just close it. I promise you, what you're trying to avoid, which is losses, you want to be comfortable taking small losses and knowing that you did the right thing by taking a smaller loss, then allowing it to be a larger full stop out. And you'll feel empowered because of that. So now go back to that 20-year-old ICT, right? Remember, I would have opened my stop up larger. That's right there would have been a larger loss, not reading what I've learned later in life to tell me that this is not going to be a good idea. So kill it before it gets there. So how can someone look at that and think that's not a good idea to learn? The books don't teach that. Here's a stop, accept the risks. If you get stopped out, okay, trade your plan your trade, and stick to your game plan. Well, the game plan is not to lose as much money. And if you have a mechanism that helps you limit that, then you should do it.